Thank you for standing by. This is the conference operator. Welcome to the K92 third quarter 2020 conference call. As a reminder, all participants are in listen-only mode and the conference is being recorded. After the presentation, there'll be an opportunity to ask questions. To join the question queue, you may press star, then 1 on your telephone keypad. Should you need assistance during the conference call, you may signal an operator by pressing star and 0. I would now like to turn the conference over to David Medilek, Vice President, Business Development and Investor Relations. Please go ahead.
Thank you, operator, and thanks everyone for attending K92 Mining's third quarter 2020 conference call. We hope you and your families are doing well. In addition to myself, we have on the line John Lewins, Chief Executive Officer and Director, and Justin Blanchett, Chief Financial Officer. I would also like to remind everyone that after the remarks from management, the call will be followed by a Q&A session. As we will be making forward-looking statements during the call, please refer to the cautionary notes and risk disclosure in our MD&A. Also, please bear in mind that all dollar amounts mentioned in the conference call are in United States dollars unless otherwise noted. Now, I'll turn it over to John to provide you with an overview.
Okay, thanks for that, David. And welcome everyone. So the third quarter, once again, really represents another step forward for K92. Completing our Stage 2 plant expansion commissioning to basically double our throughput from 550 tons per day or 200,000 tons per annum to 1,100 tons per day or 400,000 tons per annum. In addition to significant progress on exploration and a number of our other project areas. So if I start, first of all, with safety, third quarter, no lost time injuries, and we've only had one lost time injury since start of operations in 2017. So we continue to operate with one of the best safety records in the Australasia region, and we continue to have a very, very strong focus on that area of occupational health and safety. On the production front, we delivered 22,261 ounces of gold equivalent and combined that with a record mill throughput of 64,702 tons processed. If we compare that to Q3 2019, gold equivalent production was up approximately 16%, while throughput over doubled, an increase of 102%. Also important to note that for part of the quarter, our head grades were actually kept deliberately lower to mitigate any gold losses during the commissioning of that expansion. Overall, plant commissioning has performed well. We've seen positive in terms of the ultimate plant throughput, where we have actually been able to achieve over 1,200 tons per day on a number of consecutive days, which is obviously notably higher than the design throughput of 1,100 tons per day. On the mining front, long-hole stoping continues to perform to design on both K1 and K2 veins. And this year, a major focus has been on expanding the number of operating levels that we have from the mine to expand throughput. I'm pleased to say, having just returned from site, in fact, that we've now got 7 operating levels, 8th level being opened up. The incline continuing to go up towards the 1285 level, and the decline going down to the 1130 level. We've also started production from our largest stope to date, which will provide the base production for the balance of the year. So as a result of the completion of Stage 2 plant commissioning and the multiple production fronts opened up underground, we're really looking for this fourth quarter to be the strongest of the year and therefore of mine to date. I'd now like to turn over the call to our Chief Financial Officer, Justin Blanchet to discuss our financial results for the third quarter. Justin, over to you.
Thank you, John, and hello, everyone. Our Q3 2020 revenue increased by 70% to $35.6 million, compared to $21 million in Q3 2019. The increase in revenue was attributable to an increase in the realized selling gold price of $1,815 per ounce, as compared to $1,409 per ounce in the prior year, as well as increased production. As of September 30th, 2020, there are 5,859 ounces of gold in concentrate inventory. Inventories increased by 2,420 ounces of gold during the quarter, as we had a strong finish to the quarter after commissioning was completed in September. These ounces were subsequently sold in October. Cost of sales was $15.9 million for the quarter, an increase of 30% compared to the third quarter 2019. This was primarily due to increased operational activity, including the commissioning of the Stage 2 plant expansion. In addition, the company incurred costs related to the COVID-19 pandemic, including additional pay for employees completing longer rosters at site, additional costs related to the movement of personnel and supplies, and safety and medical related costs. Cash flow from operating activities for Q3 2020 was $12.8 million compared to negative $2.6 million in Q3 2019. As of September 30th, we had a $41.2 million cash balance, our highest balance on record, which includes making corporate tax installment payments in Papua New Guinea of a little over $5 million, paying $6.4 million year-to-date in principal loan payments to Trafigura, having a remaining balance of $7 million as of September 30th, and spending $15.3 million year-to-date in expansion capital. As John mentioned, in Q3 2020, the K92 gold operations produced 21,298 ounces of gold, 488,020 pounds of copper, and 7,127 ounces of silver. During the same period, we sold 19,265 ounces of gold, 487,087 pounds of copper, and 7,166 ounces of silver. We incurred cash costs of $695 per ounce and an all-in sustaining cost of $834 per ounce, which was significantly below our realized gold selling price of $1,815 per ounce for the quarter. In comparison, 18,636 ounces of gold, 209,287 pounds of copper, and 5,284 ounces of silver were produced, and 15,562 ounces of gold, 181,422 pounds of copper, and 4,847 ounces of silver were sold in Q3 2019. A cash cost of $649 and an all-in sustaining cost of $800 per ounce were also well below the Q3 2019 realized selling price of $1,409 per gold ounce. Our 2020 cash cost per ounce increased relative to the prior year due to deliberately lower feed grades to minimize potential gold losses during the commissioning of the Stage 2 plant expansion, as well as additional costs incurred related to COVID-19 pandemic and higher labor costs associated with the plant expansion. We see downward pressure on the cost via economies of scales following the successful commissioning of the Stage 2 mill expansion and continued expansion of long hole stoping activities. I will now turn the call back to John to continue with the rest of the presentation.
Okay, thanks for that, Justin. If we move on and look at it on the exploration front, we are, I think, quite obviously very pleased with the progress to date. Recent results reported from 3 separate near mine infrastructure vein systems, Kora, Judd, Karempe. If we look at Kora, late August we announced results consisting of both the infill drilling and step-out drilling to the south. First hole reported from the southernmost drill cuddy, which we only opened up in Q2, demonstrated the system basically continues along strike, which I have to say was pretty much what we expected, and recorded 9 meters at 10.2 gram per ton gold equivalent. Other results that we reported at that point in time included 4.3 meters at 113.8 gram per ton gold equivalent. And our exploration development drive to the south has now extended beyond the mining lease, and we're putting in a drill cuddy, which will actually be in our exploration area. So we will be drilling Kora South, and in fact, we already have, I think, a hole in Kora South, which is outside of our mining lease. On Judd, the announcement was made in early September, and then again in mid-November. They were the first ever done by K92. The Judd vein system really has had very limited historical exploration. It's got a strike length of over 2.5 kilometers, up to 4 known veins, and it's sub-parallel to Kora and approximately 200 meters to the southwest, and generally only 50 to 100 meters from our main infrastructure underground. In early September, ventilation infrastructure drive was developed along the Judd J1 vein, as we call it, and that was done to provide a more detailed evaluation in terms of both grade continuity and the geotechnical conditions of that vein. Preliminary results estimated that we had taken 6,200 tons at 5.5 gram per ton gold equivalent, average thickness 3.4 meters. Now that we're now putting it as a bulk sample and putting it through the plant. In fact, we have already completed that work, and we'll be reporting it in the near future. And I think it'd be fair to say I think we're happy with what we've seen come out of that. Geotechnically, the vein was shown to be very competent. So overall, very, very happy with it. Importantly, I think, mineralization encountered from the bulk sample very similar to Kora, and that really, with the continuity and the grades that we saw, really drove us towards putting 2 of our rigs to actually commence an initial systematic exploration program from underground. Mid-November, we announced the first 4 holes from that phase 1 program, as we call it. 3 of the holes intersecting high-grade mineralization. Highlight was JDD 0006, 7.25 meters at 258 gram per ton gold equivalent, and hole JD the 0003, 4.5 meters at 22.4 gram per ton gold equivalent. Mineralization intersected was similar to that which we've seen in the bulk sample and also Kora. It's obviously still very much early days, but the results are certainly very exciting. And we've got additional work planned for Judd, and so we'll be enhancing our knowledge of Judd's continuity, size, grade potential, etc., through exploration in the coming quarter and in the new year. Karempe, late October, we announced our maiden drill results from the vein system, reporting 6 holes. Like Judd, Karempe runs parallel to Kora, and the vein system has been mapped for a strike length of about 2 kilometers and has very little exploration on it. Now that vein is actually to the north, to the northwest, and about 400 meters away. Results recorded in multiple intersections, subparallel veins, the highlight being what we've coded as a KA1 vein, which in one hole came up with 2.45 meters at a bit over 40 gram per ton gold equivalent. And then approximately 100 meters down dip from that, 3.2 meters at 18.3 gram per ton in one of the other holes, gold equivalent. Again, mineralization encountered very similar to Kora. So results from both Karempe and Judd I can only term as exciting. I highlight the significant near mine exploration upside potential of K92. We've basically evaluated something like 20% of the vein field strike so far with the work we've done. So we've got an enormous amount of upside potential, which is still to be drilled, with all veins remaining open at depth and open to the south. Over the coming months, we plan to assess the impact of our exploration results carefully. In terms of the throughput potential, we're looking for stage 3 expansion and the potential for a stage 4, who knows, maybe a stage 5. And so as a result, we continue to increase the number of drill rigs we've got on site. We're currently running 4 rigs underground. A 5th rig is due this week, and so should be drilling by the end of the month. And we've actually got a 6th rig due to arrive the first quarter of next year for underground. So that takes us to currently 5 rigs on the surface, 4 rigs underground, 5 rigs by the end of the month, 6 rigs, a total of 11 rigs by the first quarter. And I can assure you our exploration people believe that they could actually use a few more. So we're having a look at that in our budget for 2021. And of course, I'd remind everyone that our exploration production growth is all self-funded, and we continue to bolster a balance sheet. So with that, operator, I'd be happy to commence the Q&A session.
Thank you. We will now begin the question and answer session. To join the question queue, you may press star, then 1 on your telephone keypad. You will hear a tone acknowledging your request. If you are using a speakerphone, please pick up your handset before pressing any keys. To withdraw your question, please press star, then 2. We will pause for a moment as callers join the queue. Our first question comes from Varun Arora of Clarus Securities. Please go ahead.
Hi, John. Congratulations to you and the team on continued execution, particularly on the cost front, despite the lower grades during the quarter. I have a couple of questions. I guess I'll start with the gold sales. I noticed they were a bit lower as compared to the previous quarters. Could you talk about what happened during this quarter regarding the gold sales?
Okay, so I mean, basically, as was mentioned by Justin and myself in my talk, we were commissioning during the third quarter, commissioning the plant. So what that meant was we deliberately put lower grades through the plant first half, the portion of the quarter, to make sure that in commissioning, where you always get a few issues, we didn't want to be putting high grade through the plant while we're commissioning expansion and Louisville. So we had higher grades towards the tail end of the period, and we had a lot of high grade right towards that end. That high grade production, especially in the latter half of September, would then basically not be sold until October. And I think Justin made comment on that I think we had twice the amount of gold unsold at the end of the quarter, the previous quarter. So that's just something that we'll pick up in the next quarter.
All right, thank you. On the cost front, I believe you're seeing some unit cost savings as a result of commissioning. Could you comment a bit on that, and what would be your guidance going ahead? Do you expect more cost savings on the unit cost front?
Yeah, look, we certainly anticipate seeing continuing savings or reductions in our unit cost as we complete the ramp up from underground. We basically commissioned the plant, and as I flagged, the plant in fact has shown that it can in fact potentially do more than 1,100 tons per day. underground, we've said it would really take us until the end of this quarter to get the production ramped up to the 1,100 tons a day. So we've still got a little way to go in terms of the underground, but it's fast approaching that 1,100 tons a day. And certainly we would anticipate that that'll continue to drive down the unit costs. As you'd be aware, probably your single biggest cost is labor, and expat labor actually forms a fairly major cost center. Doubling throughput basically adds less than 10% to your expat labor, and probably about 30% to your other labor. So it's not a doubling of the labor anywhere near it. Same thing with power, which is one of your other major costs. Doubling throughput doesn't double your power cost. And then, of course, underground long hole stoping is ramping up. It's still not at what we would call the stable point, because we're still opening up vertically underground. So we, as we move to more and more production coming out of long hole stopes, and ultimately I think we're looking at about 60% long hole stope, and that again will drive down the costs.
Right. And what's the current breakdown between long hole versus cut and fill?
It does vary, but I would say that from probably around 70% plus is now long hole stope.
70% long hole. Okay, great. Thank
As
you.
opposed to cut and fill. Obviously, you get some production from developing along your main vein systems and opening up the stopes.
Right. And just last question, what would be your guidance for the grade in Q4?
Grade in Q4, I would anticipate that I think we'll be around the 12 to 15 grams per ton.
Okay, great. Thanks, John. Thanks for taking my questions. That's all from my side.
No
Our
problem.
Our next question comes from Geordie Mark of Haywood Securities. Please go ahead.
Yeah, good morning and good evening, John. Thanks for hosting the call today. Just an extension from the earlier questions there. On mining, you're saying ultimately, obviously, you're doing pretty well to get up to your 1,100 ton per day rate. What do you think prevailing sort of capacity is there? And I guess that's an interplay between mine design and stopes that you've got going forward. And ultimately, when you're looking at long hole open stoping at the moment, can you give us an idea of the dilution factor that you're incorporating there, and anything that we can garner from how you're executing at the moment on that?
Okay. Well, the capacity of stage 2 at 1,100 tons a day, or 400,000 tons per annum, was actually based on the plant, and that was that the existing mill, which is a 900 kilowatt mill, all the work that we did and our consultants and the actual Outokumpu who supplied the mill, all the work said the mill itself could do 1,100 tons a day. That's the existing mill. And that what we needed to do was increase crusher capacity by putting in a bigger cone crusher, increase flotation capacity, pumps, pipes, and some other upgrades such as the process control system, et cetera, et cetera. And so to go beyond that 400,000 tons would involve a new mill, and obviously the costs would go up dramatically if that's what you wanted to do, and of course impact on production, et cetera, et cetera. So that was the driver that really said, so we're looking at 400,000 tons per annum, 1,100 tons a day. From the perspective of underground, certainly you could do significantly more than that. And obviously the stage 3 has shown that with the resource as it currently stands, the PEA there said you can do 1 million tons per annum. So with continuing to open up, and importantly a twin incline, you can get to 1 million, probably significantly more than 1 million tons per annum. So underground with the existing incline, I would certainly say we would be comfortable saying we could get to 500,000 tons per annum. We are moving currently a lot of waste as well, so we're actually moving more waste than mineralized material. We haven't got a study, so we don't have any ore. We just have this mineralized material that makes us lots of money. So we can certainly move material. We couldn't move 1 million tons, not with the existing incline. And as you'd be aware, one of the things that we have done is committed to that twin incline. And in fact, the twin incline now, I think the 6x6 would be pushing about 100 meters in, and the 5x5 probably around 70 meters in. So they're progressing fairly well. The important thing in the expansion or expanding underground production is opening up levels. And so I was underground last week on site. Longest trip I've had underground because there's just so much more to see. So, you know, you've got 11, what have we done? 1150, 1170, 1185, 1205, 1225, 1245. And then incline going up to 1265 and the decline going down to 1130. So, and up to 600 meters of strike length, a long strike as well. So we've got multiple levels open, and we've also got Judd, which is sitting at 1235, which is, as we mentioned, that ventilation development, but it is actually producing ore. So ramping up that production is about opening up those levels and then stope production from it. So realistically, I think until you get the twin incline in, you could probably push to 500,000 tons. Whether or not the plant can do that on a sustained basis, that would be something that we still really to look at. And this is still early days of having done that expansion. You're still in that optimizing phase, and then you start moving into your debottlenecking and seeing what you can actually get out of what you've done. Did that answer all your questions, Jordy, or was there something else I can do?
Yeah, I was just thinking on that sort of the dilution factors that you're
dilution, yeah. Look, I'd say that generally long-hole stoping, we probably picked up less dilution than we anticipated. So we certainly get less dilution from our stopes than we do actually from our development. So I think we're running at 15-20% dilution.
Okay, great. Thanks. I've got more, but I'll pop in the queue. Thanks.
Okay. Thanks for that, Jordy.
Our next question comes from Chris Thompson of PI Financial. Please go ahead.
Hi there. Congratulations on a good quarter. I mean, I understand obviously you've been engaged in a lot of areas, a lot of things. Just a quick question on just back to the unit costs. Could you quantify exactly what you anticipate the unit costs to be on a per ton mill basis? Obviously, when you reach your desired throughput rate.
I can't give you the detail right now off the top of my head. We have from the study and from our current budget that we're doing for next year, overall, the overall average cost is around 150. It hasn't really changed that much, but we haven't finished our budgeting process for next year. And when I've finished the budgeting process, I mean, that's something that will then allow us to give our guidance for actual production for next year. It's been delayed somewhat because of COVID and all the rest of it, which has handicapped us a little bit. I've actually just returned from PNG, from site and from Moresby, where we actually went through our budget. So we're just finalizing them, hopefully as we speak. But it will be in that order, Chris.
Okay, thanks a lot, John. That's great. Just one more quick question. Obviously, you said you lowered the grade for obvious reasons. Have you got a sense of what sort of grade you'd be looking at to provide the optimum sort of recoveries you'd be looking for on a forward-going basis?
Well, if you look at certainly the studies that we've done all indicate that you're looking around the sort of 10 to 12 grams per ton, up to 14, 15 in certain times, and that is the sort of grade that we'll be looking for next year. I think this year it's pretty much the grades that we were looking for. We've run a little bit higher than that, in part because the long hole stopes have come out cleaner than we anticipated. And of course, the other one is that positive reconciliation that we've historically had has continued all of this year. So we've also got that positive reconciliation. But simplistically, if you look at it, 400,000 tons at 94% recovery or thereabouts. If you're running 10 grams per ton at 400,000 or 10.5, then you're running 400,000 ounces. You're running about 400,000. You're running about 130,000 ounces. So 10 to 12 basically gets you 120 to 140, 150,000 ounces. And that is the sort of figure at 400,000 tons per annum that we projected we'd be able to produce. So over the medium term, that's the sort of grade you expect to be producing.
Great. So thank you for that, John. And congratulations again.
Well, thanks, Chris. It's sometimes things are fun.
Our next question comes from Andrew Mikitchuk of BMO Capital Markets. Please go ahead.
Hi, John. Congratulations on a strong quarter. Lots of keen questions have already been asked. Maybe I can just take us away from this quarter to looking forward. What kind of flexibility do you guys have to adapt the mine plan to the types to take advantage of anything you guys see at Judd and Karempe? It's not far from underground workings, and obviously to some degree grade is king. So are you able to fairly quickly pivot? Could we see an impact, if you saw some sort of high grade shoots as early as next year?
Okay. Look, Karempe is a long way off, 400 meters away, and it's only got a few holes in it, so it's reasonably far away from infrastructure. So setting up something there would be a relatively longer term. Judd, obviously, we're mining through Judd right now, and I make the point that we've known that Judd has grade. We've always known it's had grade. It has some historical drilling in it. Our focus has been on Cora because we knew it had grade and had continuity, and it had a resource in it, whereas Judd did not. And so almost all of our work has been focused on Cora and developing that resource so that we could go into stage 2 and then stage 3. Guys on site that quite frequently are pushing to do more drilling on Judd. But from our perspective, we've been driven by wanting to get into phase 2 and then going to get into phase 3. And, you're developing, you're opening up. And so the degree of flexibility we've had in some ways has been limited because we're moving at a pretty rapid pace. So as a result, we haven't drilled Cora, and the guys actually on site came up with the idea that look, okay, so we get that we've got to focus these drills on Cora because we've got a feasibility study to finish. We need to increase the measured and indicated, and we're actually expanding the ounces as well. We need to put a return airway development in. What about if we put it along Judd? Because we've actually gone through it and we know it's sitting here, and we were just going to go out a little bit to the east of it. So how about if we develop along it? It'll give us a lot of information on grade continuity, and it will give us geotech. And so that's what we did. And that's actually forced us to do some drilling in Judd because we got such good results out of it. And certainly, because you're right there, you have an ability to very quickly open up Judd if you wanted to. And if there were higher grades there higher grade shoots that said, look, that's something you should be doing. I think the important thing to remember is it's still relatively early days in Judd. And if you think about it, Cora, we drilled the first hole May 2017. We took the first bulk sample out in September, October 2017. And we basically taken 2.5 years, say, to get a resource or add to the existing Cora resource, which was 1.6 million ounces, to add 3.2 million ounces. So if you're looking for an impact in your from Judd and you want to add, I've seen some people suggest, 3 million ounces. Well, that'll take us quite some time to drill that if the continuity is there, and we don't know because we haven't got enough drilling. So I'm not sure that Judd's going to have an enormous impact on stage 3. But stage 3 is, we're going to start, effectively we started it because we started the twin incline, but in terms of committing to a plant or whatever else, that's probably 12 months away or thereabouts. And by that time, we may have a bit more information, and I suspect we're going to have to rely for even more information coming out. Long-winded answer. Short of it is we're going to continue drilling Judd. It will start generating information. If there are areas there that could offer us a good return, then we could relatively quickly open those up, certainly over the next 12 months, and be able to bring those to account. And in fact, as I mentioned earlier, we will be bringing out the results on the bulk sample that we put through the Judd, but we have also been blending Judd into our Cora material, and quite frankly, there's no real difference between the two materials.
Okay, well, thank you very much.
Your question, Andrew?
No, that's perfect. Thank you very much for taking us through that, and I'll step back and see if other people have questions.
Thanks, Andrew.
Our next question is a follow-up from Geordie Mark of Haywood Securities. Please go ahead.
Thanks. I'll make it quick, and this is an extension, I guess, to Andrew's question on Judd. Obviously, very successful so far. In terms of, in reference to, I guess, stage 3 expansion or stage 3 plus, given the amount of drilling, I guess you would need to complete measured and indicated on Judd to a substantial level. Given the ramp up in drilling and geotechnical requirements, I guess, would you be looking to integrate that into a subsequent PEA on an expansion or to 1.4, or would 1.4 potentially include Cora only? Just to give an idea of what the potential sort of stage 4 could look like.
Okay, well, first of all, stage 3, the PEA said 1 million tons per annum, but we also flagged as part of that in the PEA we had run a cutoff grade on the mining side of around 5 gram, so a 5 gram per ton, and that had actually meant that we had about 4 million tons at 4 gram per ton that was actually not being brought to account. Much of it would be sterilized if you actually mine in that manner. And the reason that we used that cutoff was that optimized your NPV5 after tax, and so it was about optimizing NPV5. If you want to optimize production ounces, then you would run at the economic cutoff grade, which is actually below 3 grams per ton. So what we said was, in the feasibility study, we will actually be looking to bring those extra tons and ounces to account. And simplistically, if you look at it, 1 million tons per annum was averaging, I think, 318,000 ounces gold equivalent per year. But there was another 4 million tons at 4 gram per ton that was not treated. Now, we just happen to have a plant of 400,000 ton per annum capacity, which just nicely fits in with a 10-year life of treating that additional material, which could add another 40,000, 50,000 ounces to your production. 400,000 tons per annum, 4 gram per ton, 95% recovery or thereabouts. So there's an immediate potential from Cora alone that in fact you could run at 1.4 or 1.5 million tons per annum. And that is something that we're definitely looking at in the feasibility study. Whether you then say, well, actually, maybe the new plant should rather be 1.5 million tons per annum and leave that plant for other potentials such as Karempe, such as Judd, Maniape, Arakompa. That's part of what we'll look at in the study. So we're not wedded to 1 million tons per annum for stage 3. In fact, I'm almost of the view that it almost definitely will not be 1 million tons per annum. It will be 1.4, 1.5, which may be entirely a new plant or maybe a combination of the new plant and the existing plant. And we'll continue over the next 12 months with our additional rigs to be drilling Cora South. So continuing to push to the south, we are continuing to take that development further and further to the south into our exploration ground, looking at some deeper holes from underground as well, and also drilling Judd from underground and also from surface, both Judd and Cora. Continuing to drill Karempe as well. So all of that's going to be happening over the next 12 months. Plus, of course, we're drilling at Blue Lake right now as well. And if I let my exploration boys get every rig that they want, we'll also be drilling at Maniape and Arakompa, and there's a couple of other things, Matthew, they'd like to be drilling as well. It's exploration guys, what it's like. It's what defines them. How many drill rigs have you got versus how many drill rigs have I got? And there's no two ways about it. They can justify having more rigs.
Okay, no, that's good. Good to know on that. So the cutoff for the feasibility is still kind of mid-2021, based on that potential expansion.
Look, feasibility certainly because of where we are looking at now with Judd and various other things, it will be second half of 2021.
Right.
We've already taken the rigs off of drilling Cora to drill Judd, or two of the rigs anyway, off to drill this thing of Judd, and I anticipate that we'll continue drilling Judd, because although to get 3 million ounces is a relatively long procedure, there is an area that you can focus on that very quickly. You could certainly bring in a 12-month period of 1 million ounces plus to account if they're there, of course. If they're not there, no matter how much drilling you do, you ain't going to find them. So one thing we haven't been able to figure out yet, how to make exploration drilling actually generate ounces. It's only really good for finding them.
Okay, great. Thanks. I appreciate that.
Thanks, Jordy.
This concludes the question and answer session. I would like to turn the conference back over to Mr. Lewins for any closing remarks.
Well, thank you for that. Look, for us, this has been a challenging period. I mean, this is COVID-19. We currently operate with quarantine for all of our people coming to site. I was on site, did a week on quarantine before I could go out into the workforce. I'm back in Perth now, and I'm sitting in a hotel in Perth, and I'm quarantining here for 2 weeks. All my wife can do is drop me off some supplies and whatever else. So this is a challenging time. It's a challenging time, I think, for many people. I'm actually in awe of our team on site and what they've achieved. I went to site, and it's the longest I've ever not been to site, not been to B&G. It's almost 6 months. And the change was stunning. From going to the camp, we took the place over. It was 400. It's now a 1,000-man camp. Going up to the warehouse. The warehouse is now being tripled in size. We've now got a concrete cement batch plant that can do 5 cubic meters in 5 minutes, so that we're shotcreting underground. But that plant will be big enough to actually do 1 million ton per annum expansion as well. And obviously seeing new process plant operating. So these guys, and all of that has been done without anyone coming in from outside, from overseas to assist with that. It's all been put together by our own people, or in the case of the camp by local suppliers and contractors. And then, of course, you get up to the portal, twin incline, steel sets now in 6x6, the 5x5. Looking at it going in, all the walls and the backs shotcreted, looks absolutely beautiful. Guys are doing an incredible job there. Brought in the additional equipment to be able to do it. We've set up remote control of the LHDs, of the 517i, all of that as well. All of that done in the last 6 months. All of that done in the middle of COVID. So it's really been an exciting period, and there's an exciting period coming forward. David loves to use transformative, and the problem with the word is that we keep having transformative periods, and we have to keep using the word. We haven't come up with a better word, because every quarter is transformative for us. I like to think that we've delivered on so many areas. We are really excited by Judd and Karempa. We've got more results coming out for Cora in the next couple of weeks, and there's some usual story with Cora. There's always some good results that come out from there. We're back at Blue Lake as well again, and so exciting there. And Blue Lake now being drilled with our own surface rigs. So we've now got 2 of our own surface rigs, as well as 3 of our underground rigs, 4th of our own underground rig coming in this week, 5th of our own underground rigs. coming in first quarter. So very much driven by our people, and that's our greatest strength is the team of people that we've been able to put together. And at the same time as all that's happening, coming up with a safety record, which is in PNG is second to none. So we're looking forward to this quarter. We're looking forward to next year, and all the potential that has. And really appreciate the interest and the opportunity to share that with you. I think I've done enough pontificating. So thank you all for your time today, this evening, this morning, wherever you are. Thank you.
This concludes today's conference call. You may disconnect your lines. Thank you for participating and have a pleasant day.